Okay, so this trade was taken on 1st April 2024 in the Indian stock market intraday. So the stock was Apollo Tires, and if you just look at the previous day situation, this is up to the previous day, that means 28th March. This candle is 2 days candle, so we are not considering that. So first of all, our understanding here was the price is supposed to go to this order block, as we can see here. So what I thought initially was price will be reaching this order block. Why? Because I just observed that there was an inefficiency here, and the previous day candle was actually getting rejected from here little bit. So I just observed this one, this one. This was a wiki candle, right? So if you just go to the 5 minute chart, in the previous day there was a huge reaction. So in itself it was a market structure shift here. So my idea was price was reacting from this particular inefficiency, and so it is highly probable that it will reach this swing high first, this swing high, and then eventually this inefficiency, and then eventually this order block. So keeping that in mind, I was observing the price the next day. So in the next day, first of all, it took the previous day high like this, and then it came down and making lower highs and lower lows, like high, low, lower high, lower low, again lower high, lower low, and then here it gives a market structure shift like this. This was a market structure shift, and I was bullish, so I was thinking that it is reacting from this order block here. So I just waited a little bit. So I observed that inefficiencies are being formed here, which is a good sign. So this bullish inefficiency fair value gap has been there, and then in 3 minute structure also we had this inefficiency here, and then we had another here. So according to me, price was bullish. So then based on that, I took my trade from here, this particular junction of down closing candles, and put my stop loss here, and this was a target 2.5, something like that. But as you can see, the trade didn't work out and we missed stop loss here. So that was the thing. I could not have done anything. So here I also observed that price was reacting from here in this particular order block, and I think I have taken the trade not from here. I have taken the trade from here. So this was the first fair value gap. Then after reaction, it created another fair value gap here, this one, and then I took my trade, I think from here, keeping my stop loss here, and this was my target, something like this. And as you can see, price just gave me stop loss here. So anyway, after that I analyzed the situation. So what could have been improved? So basically in the daily chart, what I found was, although price has not reached the order block here, it was actually to previous day, it was reacting from this inefficiency that I could have noticed. Okay. Okay, so it may be little bit difficult or little bit over enthusiastic to assume that it will again react from this inefficiency and go beyond this. That may also occur, but that didn't occur in this case. Okay. And what else? Another thing was, this is a mistake based on the rules. So even if we have an inefficiency here, which is perfectly all right, we can take trade from here, but the condition is that the at least one candle out of this should be bullish. So this is coming down, this taps in, then either this candle has to be up close candle, or at least the next candle has to be an up close candle. After that we can take a bullish trade. So both the candles were bearish and there was no sign of bullishness, except for the fact that in the 5-minute chart at the end of the day we had this market structure shift. So that may not be too much evident in order to classify this as a bullish example. So that's it. My idea is it will react again from these order blocks right from here, and maybe it will go up after that. So let us see what happens. Need to follow this stock closely. That's it.